In today's video, I'm going to share my investment strategy for 2021. Who would want to be an investor right now? The world has gone absolutely nuts. In today's video, I'll just share some of the interesting and critical things that I think are going to happen in 2021 that could potentially impact the considerations you need to make in your investment strategy going into 2021. Now, if we're meeting for the first time, my name is Matthew, and on my channel, I like to talk about growing in your career, growing your investments, your income, and improving your personal finances. So if that's something you'd like to do, please subscribe to the channel. Also, please be sure to check out the description box below for other links to interesting content that I think you may enjoy. All right, so let's climb into my investment strategy for 2021. I've mentioned many times on the channel before, I'm no fundi. I make these videos for entertainment purposes only, but I do enjoy the opportunity to share some of my learnings and things that I've gone through on my journey, and I really enjoy making content. Here's my portfolio. I've invested purely on the ASX in Australia. I don't have any international exposure. Just a breakdown of where the sectors that my holdings are in. So you can see in banking and financial services, I have 29%. In the energy sector and mining, 28%. Travel, 15%. We'll talk about that one a bit later. Telecommunications, 10. Entertainment, 7. And then I have a little bit in retail, property, and payment solutions. I don't think you need any prizes to identify what sort of investment strategy I'm following. I'm so heavily into telecoms and into banks and into financial services. It's very obvious that I'm an income investor. My portfolio is weighed very heavily towards mature businesses with an established track record of paying dividends. And I think you can see very clearly that's what my portfolio is geared towards. So I won't beat around the bush. My strategy for 2021 is to hold all and to buy none. And the main reason for that is I believe the real estate markets, particularly here in Australia and I think also in other countries like the US, are going to pose a lot of opportunities in the not too distant future as a consequence of the global pandemic that we've just gone through. I think potentially housing prices are going to start to come under pressure. I think the availability of more affordable housing is probably not too far around the corner in the next few years. So part of my big picture investment strategy is to try and start to build up now a bit of a reserve of cash so that I can potentially break into the real estate market in the not too distant future. That being said though, I am keeping my eye on a few things in 2021 that could influence or even potentially change that strategy. So let's get into those. So the first thing that I'm looking at in 2021 will be the transition from Trump to Biden. Now, everybody who's watching the news knows that it's by no means been smooth sailing to date. At the time of recording this video, we're coming towards the end of December in 2020. So it's not too long before the president-elect is supposed to take office. Generally, I just think that this is going to be a very, very tumultuous and unpredictable and potentially disruptive process. And that could very likely spill over and have some volatility or impact on the stock markets by causing more volatility. So I think that's the first thing that we're going to keep an eye on, that we have a relatively defined timeline on. So the first quarter of next year, the transition of US presidents will be the first thing that I think will have an impact on the markets potentially, and something that we would need to take on board and be aware of. The second thing will be the efficacy of the vaccine and the time to distribute it globally. Okay, and this is obviously going to impact the recovery periods of certain companies. A very obvious example of this is if the vaccine doesn't work, or if it takes another year for the vaccine to reach everybody and to fully start to have the impact that we want it to have, that could further push out, for example, the restoration of the travel and tourism industries globally. And therefore, companies that have got a huge stake in the activity within these industries, such as airlines, may need to raise further equity capital for survival or raise further debt for survival. And that's obviously going to have an adverse impact on their future prospects and on their profitability. So that'll be another key thing to keep an eye on if you have exposure in that sector. The third thing that I think we need to keep an eye on, and this will be around about March, will be the end of JobKeeper here in Australia and the end of any stimulus packages or continued stimulus packages in the US. Both will have an impact on the housing market, I think in terms of potential foreclosures. Both will have an impact on jobs and unemployment, and both will have a big impact on retail because as consumers have less money to spend, they are not going to be able to sustain, or retailers are going to battle to sustain the level of activity and profitability that they would usually be able to at the, shall we say, pre-pandemic levels of employment. The fourth thing I'm keeping an eye on is continuous trade tensions between Australia and China. It's already having an adverse impact on coal exports, wine exports, and seafood. In the event that these trade tensions and embargoes start to spread to other commodities, companies that have a big trade lane or a huge distribution into China, for example, like A2 Milk here in Australia, they sell huge volumes of milk and milk powder into China. And if that is now starting to get hit with duties or any other kinds of trade impediments, that could potentially have an adverse impact on the viability of that business for people that are holding A2 milk. Again, this is not financial advice. Please don't take what I say on board in terms of your decision making. Obviously, do your own research, but these are the kinds of things in terms of news that I think we should be keeping our eyes on so that we can stay aware of the things that are impacting the businesses that we are holding. And the last one is the sustainability of the US stock market when more and more companies start to post their results. So there is a big disconnect between the performance of companies on various stock exchanges, not just the US, and the fact that the stock market is at an all-time high. This will eventually have to normalize. And if any companies have been hit with a lag, in other words, between when things have happened and when the results that they start to post are showing the impact of that which has happened, that will certainly come to fruition in 2021. And as more big companies start to show the impacts of the pandemic and potentially a more bleak or longer recovery time frame than initially projected, this could start to get the institutional investors that in essence control all the stock markets a little bit jittery, and they could start to then look at reducing their holdings and to bring down the value of some of the big high market cap global firms on the US stock exchange. And this will have a ripple down to the other stock exchanges in the world that generally take their lead from the US stock exchange for the most part. So if I take all this information and I roll it up, for me, the only change that I may make from my hold all and buy none strategy is I may potentially consider exiting a coal mining company that I have a holding in. It's not likely to pay a dividend in the short term anyway, and that's sort of one of my main criteria to hold a stock long term. Its liquidity rating is down to medium, where it used to be high, which is another risk element that I keep an eye on. But for the most part, I think if its main trading partner is China, and there's potentially going to be embargoes on coal exported from Australia into China, it's a big business risk. And for those reasons, I will certainly be keeping an eye on this stock and potentially exiting at a price in the not too distant future if it continues to look relatively bleak. The other thing that I'm obviously going to be mulling over is my travel stocks. Now, I've recently exited Flight Centre. It was a business that I just feared for the long-term viability on. Again, not financial advice, just telling you a story of a decision I made for the reasons that I made it. So my exposure is less than what it was. At one stage, I had over 25% in travel. I've now brought that down to 15%. And I hold what I would call national carriers. So I've got Qantas here in Australia and I've got Air New Zealand. Companies that have got huge stakes or investments linked to their national governments. And therefore, one would always have a relatively high level of security that they're not going anywhere. That being said, are they going to be able to provide value? Are they going to be able to provide dividends? Are they going to be able to return profits in the next sort of 5, 10, 15 years? A lot will hinge on the recovery time frame and probably the first 6 months of next year, which is what I will be keeping my eye on. The other travel stock I have is Webjet. I'm still quite bullish on Webjet because of the relatively low overhead that they're able to run. More of a web-based model, more of an e-commerce based model. I think most businesses are probably going that way, and they've probably taken this opportunity to pivot and to streamline and become even more slim in the way that they're operating. And therefore, I still believe potentially in the long-term prospect. And thankfully, I'm also in at a pretty low price. I bought them at the bottom of the curve. So can see myself holding my travel stocks for the whole of next year. But if the outlook, as I mentioned, in terms of the recovery timelines, stretches out a little bit further, that may trigger me to walk away from that risk. But that's it. I mean, at the end of the day, the purpose of this video is less about my particular holdings and less about what I particularly am going to do in my situation, and more on what some of the key things are that we need to be keeping an eye on and as investors in 2021. Like, as I mentioned, the transition of the US presidency, the markets in the US, the end of JobKeeper, the end of stimulus packages. This is all the whole idea of today's video is to help you understand that external news has a direct impact on our holdings, our investments, and our investment decisions. So I hope you enjoyed today's video. Please leave a like and subscribe if you found it useful. Please check the description box below for other interesting content that I think you might enjoy. Thanks for watching, stay safe, and I'll see you soon.